this is a groundbreaking technology. It is also an upgrade to existing technologies. Build a platform in a proprietary manner, i.e. from scratch. And that's how you're seeing the market kind of tectonic plates shifting. And that really is a game of playing musical chairs. It's about riding it going up and trying to get out near the top while there's liquidity in it and trying not to get left without a chair as it comes crashing down. Funds coming in. I don't think that we have not seen the retail rush coming in is a positive because it sends out a signal to the entire market that crypto is no longer a dirty little secret.
Hello everyone, welcome to Rug Proof with Zoina, where we bring real builders of crypto to real investors. And today we have someone who doesn't just talk the talk, he builds. Toby Gilbert, the CEO of Coinweb. It's a pleasure to have you here today, Toby.
Thank you for having me.
So let's start with something that's talk of the town. Recently, our industry is in a phase that not even Satoshi could have imagined. Bitcoin hitting 100K is the new normal. Governments and institutions are buying cryptocurrencies like there's no tomorrow. So what's your take on this and how do you feel about the shift in momentum?
I think that we've seen a huge push recently, as you said, from government, institutional, coming into crypto. But what we haven't seen is a huge push from retail coming into crypto. So if you actually track the number of wallets that are on chain, there hasn't been a significant increase past the last bull run where we saw just north of 70,000 to where we are today at 100,000. And I think it's generally accepted that the push up to 100 plus has come from institutionals such as ETFs being authorized in the States and so on and so forth. But there is still a long way to go before we see retail adoption. And retail adoption is not just retail users purchasing crypto, but it's actually using crypto products. And I think we can break it down between the top 10 pairs that in large part can be seen as a store of value, but also a lot of the projects that are being built that are referred to as alt tokens, they actually require a mass retail base to be able to use them in their utility capacity. And we haven't seen that yet, but that's what everybody is very hopeful of.
Yes, definitely. So actually, this is so true that we need a lot of retailers to come in and adopt this. And no doubt that it's exciting in terms of price hype. And who doesn't want to see their portfolios growing? But with government coming in, don't you feel that it's drifting away the original goal of decentralization wherein the power stays with common people?
Well, I mean, decentralization as a concept, I think we've got to drill down into that a little bit more. If the question centers around decentralization not being achieved because there are a handful of parties that are buying crypto and holding crypto, that's very different from the concept of decentralization at the core of blockchain, that there is no centralized party that is controlling a system.
Yeah.
So I think those are two entirely separate things. I don't necessarily think that institutional buyers or governments buying in is necessarily a bad thing, a negative, when considering the question of centralization versus decentralization. In fact, I would say that those parties buying into the space and supporting the space is a positive because it sends out a signal to the entire market that crypto is no longer a dirty little secret in someone's basement, but it's lending legitimacy to the space. Decentralization at the core of blockchain and the technology is still there and exists. Decentralization as a concept occurs over a period of time. You can see a number of projects when Ethereum moved from proof of work to proof of stake. Ethereum became very, very centralized at that point in time.
Yeah.
Now, over a period of time, that's becoming more and more decentralized. That's a process, I would say, and that still remains very much at the core of what the technology is. And I would hope to see that become more and more decentralized over time.
Definitely. And I feel, as you mentioned, that crypto is not a dirty little secret anymore. So you've been building in this, like in the Southeast Asian market for over 7 years now. And most people are well versed with the US part of the crypto thing. So what's brewing in this part of the world and what people should know about?
So I mean, we're a global project. We are
Yeah.
based in Southeast Asia, and I would say it. You can. I always try and draw parallels between different industries, and one parallel that I think one can draw is with telecoms. And if you look at the United States, for example, they were the very first early movers on mobile communications. So saturation of people having mobile phones, the States was really at the forefront of that movement. But if you look at the States today, their telco system and network is actually pretty outdated, even if you compare it to certain African countries where everyone seems to have the latest smartphone, 5G rollouts. And the reason for that is you're dealing with mass legacy networks
Right.
per se. Asia, and even you look at China, and less relevant for blockchain, obviously, today because it's whilst blockchain technology is being rolled out in China, crypto is still illegal there. But everybody is used to QR codes to make payments and digital wallets and so on and so forth. Having a piece of plastic in your wallet in Asia is, kind of, what's that all about? It's all a digital wallet situation, and their retail markets are very, very used to
Yeah.
operating using digital wallets.
Yeah.
And so, in terms of crypto, that's closing the gap for a retail user of understanding how to use a crypto wallet. That's a much smaller gap to close than, for example, if you're in Europe or you're in the US, where credit cards are still the norm. I mean, in the United States, chip and pin is a new
Yeah.
concept. People still put their signature
Yeah.
onto a credit card payment. So that adoption rate is accelerated considerably, I would say, in Asia, because the retail customer base is actually used to using these sorts of technology compared to the States and Europe. And when we get to the point, because we need to get to the point where there is going to be a mass usage from a retail customer base, then, as I said, that the adoption will be accelerated in this area of the world, just because you don't have to go and educate people from scratch
Yeah.
into using digital wallets and so on and so forth that you pretty much have to do when you're in the United States and definitely in Europe.
Yeah, so actually, being from India, this is the thing that things are so much digitalized
Yeah.
that people are just, used to using things just on the tip of their hands from
Right.
their phone. So it's like that. Okay, so coming to Coinweb, for someone who is new to crypto and for someone who wants to know crypto, and for them, could you please explain like what Coinweb is in simple terms?
Absolutely, yeah, I'll do my best. What we see a lot of in the space today is that, how do I put this? We'd call them forks. There's a whole glossary in crypto language where we have our own language, but you can actually boil it back to something that can be simply understood. A fork is a copy of another platform. And so people, one of the principles of blockchain technology, that it's open source, and therefore you can go and copy, fork an existing platform. Uniswap is a great example of that. You can go and take that code base and you can spin it up and you can have a copy of the Uniswap platform, and you can brand it as you like, and you can make it, it's composable, so you can then make changes to it. You can upgrade it, and then it becomes about marketing and then winning a customer base. The vast majority of what we see in blockchain today are forks, copies of existing platforms with improvements. In a moment of madness, we decided at Coinweb that we were actually going to build a platform in a proprietary manner, i.e. from scratch. I don't ever recommend anyone does that. If I could go back in time, I would fork. But we built something from scratch because we identified that there were certain vulnerabilities, weaknesses in what the existing platforms and systems were. And namely, that each blockchain, some blockchains are forks of other blockchains, but the majority of blockchains are incompatible with one another.
Yeah.
So if you think about, they're different operating systems entirely. And then you have assets that live on those blockchains. The native token of Bitcoin is the Bitcoin token that lives on Bitcoin. The native token of Ethereum is ETH that lives on the Ethereum blockchain. And they're totally incompatible with one another. They're different operating systems. So what the accepted route to market to be able to swap the assets between the incompatible systems have been, or to move between those different blockchains, could be the transfer of information, for example, has been to glue a third-party effective blockchain in between those two blockchains.
Okay.
And then what that does is significantly weaken the security, because if you're transferring the assets between these chains or passing information between those chains, and one of the main properties of a blockchain is it's secure. If you build a bridge, another blockchain between the two of them, and you want to be able to hack that information or hack those assets, then the attack vector, the weakness, is the glue, that blockchain that is building a bridge in between the two incompatible systems. And that is where we have been to date. What Coinweb does is effectively has built a cross-chain reactive smart contract framework that then monitors the events of those underlying chains and then can react to that information at our layer. So we haven't just built another blockchain between the two chains. We rely upon the consensus of those underlying chains to effectively tell us if those events have or have not happened with finality. And then effectively now we can pass information, we can pass assets between incompatible chains in a secure and safe manner at a very low cost point.
Okay. Got it. So
that's a 30,000 foot view down. Honestly, I can drag you into the weeds, but just so it can become digestible for a kind of non-native crypto audience. Yeah.
So that's what we wanted, like our audience to understand from you, that what problems is like Coinweb solving, and how would a layman understand that?
Okay. So the best way to do this is by giving examples.
Yeah.
So today, there are 3 protocols in the space that have decentralized exchanges attached to them, known as DEXs. Centralized exchange, CEXs, are like Binance and Upbit, Bybit, Kraken, so on and so forth. A decentralized exchange effectively enables retail customers to buy swap assets between different chains. Now, I already touched upon the point that those chains are incompatible with one another. Those assets are incompatible with one another. So today, if you want to move Bitcoin into Ethereum on a decentralized exchange, on a DEX, there are only 3 protocols and their DEXs that handle it. That's Chainflip, Maya Protocol, and Torchain.
Okay.
And the way in which they activate, enable these swaps is to have validator sets. So think about them like escrow agents. In Torchain's case, there are over 100. And they're effectively confirming that the assets are moving on those chains, and that they're acting as an escrow agent to safely move those assets on the incompatible blockchains across from one another. That has a really, really high cost attached to it.
Yeah.
So an average swap on those 3 protocols or their DEXs is above 2%. But if you go to Binance, you download the Binance wallet, you open an account, well, it could be as low as 50 bips, or if you're a professional trader, you could be at 10 bips. So in the case of a centralized exchange, they're the gatekeepers for a decentralized world.
Yeah.
But in a DEX, you're not entrusting a centralized party with your assets, and that can go wrong. Sam Bankman-Fried, for example. So to have a centralized gatekeeper controlling the decentralized space
Yeah.
is totally upside down. But at the same time, the DEXs, because of their architecture and having to have all of these validator sets I refer to as escrow agents for a lay audience, that costs a lot, and cost wins.
Yeah, so as far as I have understood, is interoperability is the heart of Coinweb. So can you like again take us through like how is it solving real world problems in the simplest way?
Okay, so I think the best way to be able to do that is to be able to give you a real world example of what we are achieving.
Yes.
So today, to be able to move assets between chains, and let's use Bitcoin moving to Ethereum, Bitcoin, native Bitcoin to other assets, there are really three main protocols that are achieving that in a decentralized capacity today. And that's TorChain, Maya Protocol, and Chainflip, and their associated DEXs and integrations. For them to be able to achieve this, and taking TorChain as an example, they have over 100 validators that confirm the transactions as they go down the line. Think about them as escrow agents. And that has a cost attached to it. And on average, a swap between native BTC to another asset is in excess of 2%. Whereas on a centralized exchange, on a SEX, Binance, Kraken, Bybit, KuCoin, so on and so forth, they are sub 1%. And if you're a professional trader, you could be at 10 basis points. They don't have to rely upon the off-chain info or the validator sets to be able to swap those assets across. So it's much cheaper. Those three protocols are trading at $150 to $200 million a day, whereas SEXs, Binance alone does on average $100 billion a day worth of trade because price is winning. What Coinweb has achieved now with its first DEX has been built on top of it called PactSwap. It utilizes Coinweb's cross-chain reactive smart contract framework, which then mitigates the requirement for the validator sets. And we are achieving native BTC into USDT on the Ethereum network at 30 basis points. By mitigating the requirement of effectively having to glue a blockchain in between the two blockchains for which you're swapping the assets over, not only are we safer, but we're more capital efficient. And that translates directly into a cost saving. And that means the DEX that's built on top of Coinweb can now enable transaction for its retail customers at a similar price point to SEXs, but without any of the overhead of SEXs, the regulatory stuck funds. SEXs are now acting like they are high street banks. And you're having to trust a centralized party as the gatekeeper to the decentralized world.
Yeah.
So these are the sorts of things that Coinweb is enabling, which really just changes the whole landscape of the space.
All right. So before coming to PactSwap that you mentioned, I would say that there are a lot of reports that are suggesting that there's a significant rise in the trading volume of decentralized exchanges, which is approx like 20% compared to centralized exchanges early in the 2025. So as per me, I feel like it is due to regulatory pressures or maybe the vulnerability of centralized exchanges getting hacked or going bankrupt. So, what's your take, and what do you think that this trend will continue, or how will it go?
I happen to think there's always going to be a room for a centralized exchange, rightly or wrongly. If we want institutional money
Yeah.
pouring into crypto, then their compliance as a counterparty, they want to know that they are facing off to another regulated party per se. We are seeing DEXs capture a larger portion of the market at the moment. And yes, as you said, that will be due to certain exchanges getting hacked or going bust or having bad actors. Because until recently, there's been a desperate lack of any regulatory oversight for centralized exchanges. So if you're an exchange in TradFi, there are certain reporting standards, audits, annually or quarterly that you have to make good on to maintain your licensing position. That hasn't been the case with centralized exchanges. And as a result, I would say inexperienced actors have maybe intentionally, unintentionally got themselves into a pickle, stolen funds, misappropriated funds, set up products on those exchanges which have led to considerable losses for retail customers with no protection for those customers.
Right.
And so that's given some really bad press to
Yeah.
the space. At the same time, many kind of crypto natives don't want to have to subscribe to centralized parties or give all their information up. They want to be able to live in the decentralized space at the same time. And so there is a shift within that market. And once again, as we now see centralized exchanges move into the regulatory space, that comes with a whole load of overhead that I touched upon earlier. It could be stuck funds, know your counterparties, all of these sorts of questions, which then puts off, I would say, more crypto native retail players, and then they naturally then move towards DEXs. So a lot of exchanges that weren't asking for KYC and so on and so forth are now asking for that, all of the things that a high street bank would require. And as a result, once again, you see
Yeah.
that shift towards DEXs as well. So I think it's multiple factors all coming together at once. And that's how you're seeing the market kind of tectonic plates shifting,
Yeah.
and then people bedding themselves down and servicing their own retail customer bases that want to be decentralized or they want to be centralized.
Centralized,
Yeah.
yeah. Coming to PactSwap, it has like a unique approach to decentralized trading. And like I know that it is backed by big names like Brock Pierce from Tether and Scott Walker from EOS. So can you share what makes PactSwap different and why it's a game changer?
I mean, as I touched upon earlier, it is simply as a headline USP, it is 90% cheaper than the three protocols that handle native BTC to other asset swaps. It's up to 45% cheaper than single chain DEXs such as Uniswap. And it brings trading, the cost of trading and the price of the swaps in line with trading on Binance. But now you're in the decentralized space without any of the regulatory overhead of what a SEX enforces on you. So that's really at a high level. That's where the win is. There are a number of other properties on top of it, like it's highly composable. So effectively, any party can start building DeFi applications on top of it and using this as an engine at its core. And that's where you get the network effect. So yeah, there is nothing like it in the space at this moment in time. And it's not a promise. It's live in beta. And we believe next week, so moving into the fourth week of May, it'll be in live production.
Oh, wow, that's
Yeah.
amazing. So, as you mentioned that there are some specific parties that can build on it. So, can you give us like a layman term what those parties are and how do they build on it?
Sure. I mean, I've got to be. When people think I'm mad when I use this as an example, especially when it's a lay audience, a non-crypto native audience. But if you have a Web3 game that has a token within it, today, potentially, if it was built on top of blockchain A, you would have to go and acquire the native token of that blockchain to be able to pay the gas fees
Yeah, right.
within the Web3 game. So now you have to go to an exchange, buy that token.
Yeah,
But that exchange may not support the native token of the game.
definitely.
So
Yeah.
now you've got to go, after you swapped, let's say, Bitcoin into, now you're holding Ethereum, the game's built on top of Ethereum. Now you have to swap Ethereum into the native token of that game, and now you're ready to play. Now that is a huge barrier to entry for anyone that is not used to blockchain technology. And that
Right.
is a huge barrier for adoption at that point in time. Now, a game could take, using a simple API from PactSwap, it could integrate that within the game, and then a user could effectively land directly on the dApp, hold their Bitcoin. So now where we get to, the game could integrate using a simple API, PactSwap, which would enable a user to come directly to the game. They're holding native BTC, and they could take their native BTC or Ethereum or Tron, anything they wanted the DEX support, and immediately convert it into the token on the game there and then, which is exactly how it should be.
Yeah.
It's not a case of, oh, wow, that's amazing. It's just that today, in the majority of cases, you just can't do that.
Yeah.
And that's why there isn't much adoption for the majority of these applications, because of all that overhead, because of that barrier to entry. And we just solve those pain points and then deliver the product as it should be, as people would expect it to be in the real world.
I couldn't wait for PactSwap to go live so that it fixes my problems as well. So, to be honest, most decentralized exchanges are a pain to use, and even seasoned traders they avoid them due to bad user experience, low liquidity, and high gas fees. So, how is PactSwap fixing these problems?
We've had a really core focus, or the team have, on delivering something that is usable. So we have a very, very keen focus on usability from the customer's standpoint. We are not looking to simply attract a crypto native audience. It has been built in mind from UI UX, backing all the way down to what the unique product is at the same time. And frankly, that's why we are so confident that, and it's not inconceivable there's an internal target, a North Star, which I'll make public, of $1 billion a day. And in real world terms, when you deal with sexes, that's only 1% of what Binance are doing. Is that achievable by merging together real world UI UX with a unique blockchain product? We believe it is.
So, there are over 11 million tokens listed on CoinMarketCap alone. And then there are tokens and projects like yours who are building in silence for years. So, how do you stay focused when, chasing the hype is the thing? And what are a few red flags that our investors or the new investors should watch out for?
So, painfully is the answer to your question, bluntly put. It's in a space that is dominated by many false promises
Yeah.
and hype. Trying to remain focused, remain funded, when you're actually building something that is going to be useful is very, very difficult. And I have this conversation with quite a lot of people and say, there are a number of areas that where money is made within the blockchain space. One of them is centralized exchanges, which has done fantastically well to date. Another one is investing in what effectively are stores of value. So many of the top 20 projects are really stores of value. There are a number of L1s out there that have very, very little use cases or on-chain transactions, but the token itself has so many investors in it that it is a store of value, and it's tradable. And they can go up or down depending on. So I think there are a number of ways that investors make money in the space. One of them is centralized exchanges as a business. It's done fantastically well, obviously. Another one is investing in what are effectively stores of value. So there are a number of projects, top 20 projects that are out there that have very, very little real world use cases. But
Right.
there's so many investors in their tokens, and they kind of go up and down.
Yeah.
To be blunt about it. Then there is alt tokens that are actually building. They've already launched. They're at a low market cap. They're building in stealth. And at some point in time, there's going to be adoption going to kick in if those projects can survive, if they can pull through, if they can get adoption. And then you would see a massive pop. And a lot of the top 100 tokens had launched. Their pricing had gone down. They get adoption, and you see a hockey stick curve. So that's another one. And then there's fads. And we know about fads.
Yeah.
NFTs, meme coins, and that really is a game of playing musical chairs. It's about riding it going up and trying to get out near the top while there's liquidity in it, and trying not to get left without a chair as it comes crashing down. So I would say those are all these are the different areas in which people can invest and try and make a return within the space. But research. What are the founders, what are the teams done before? How successful have they been before? Are they funded? Do they have enough runway? And trying to get under the hood and really understand those projects and understand those teams. No guarantee, but it's like any investing. If you can get that information out and you can make a right judgment call on it, then you have an opportunity to be able to make a return.
Definitely. So, like investors need to do a lot of research, because, as you mentioned, that there are projects coming in, launching, pumping, and then they just vanish in
Yes,
thin
yes.
air, and nobody knows
Unfortunately.
about it. That where they went, nothing. So,
Unfortunately.
definitely, these are some red flags that we should keep in mind.
Yes.
So, moving on, for someone who is entering this space in 2025, what do you think? Are they still early, or the window is closing? What's your opinion on this?
I mean, honestly, people have been saying this since 2 weeks after Bitcoin was launched. You go from a cent to 5 cent. Oh, I've missed the boat. There's ever since 2017, since I've been in the space, I've been hearing the same thing. A very old friend of mine is a significant shareholder of one of the top 3 exchanges, and he holds a considerable amount of BTC. And he says that under no circumstance would he sell $1 worth of his BTC at this moment in time. And I tell the story because one would imagine that he has good quality of information as an input from his team surrounding him, and he is absolutely convinced that in the near term that we're going well above 150,000, if not far higher. And is it inconceivable that Bitcoin could be $1 million a token? Absolutely not. It's not inconceivable in the slightest. So I think that one of your opening questions was around kind of this wave of adoption that we've seen driving Bitcoin to north of 100,000. And as I said, I think that's institutional and then government funds coming in. I don't think that we have not seen the retail rush coming in. We are lacking in retail product using blockchain technology. I think it should all be about product, and that's when we'll see retail funds come in, and there's a long way to go from where we are today.
Yeah, it's safe to say that it's never too late.
Absolutely. Well, sometimes it is too late, but I don't think at this point in time that we're anywhere near being able to have a conversation about it being too late.
Okay, so what do you think crypto adoption will look like globally in the next maybe 5 to 6 years down the road? And what's the one big thing that could still hold us back?
Well, we've got another 3.5 years of Donald Trump in office. I would say that's going to be helpful. He's promising a regulatory framework for the space. I think it's difficult for most countries around the world to set out a regulatory framework until the United States does, because they don't want to set it out and then it's running contrary to what the US does, and then have to, in an embarrassing moment, pull back or amend it to fit in with the US. I think that's coming. I think when that does land, I think you'll see that framework being replicated in different shapes and forms all around the world. And when that happens, I believe that we'll see institutional funding coming into VCs, pension funds, so on and so forth, that then start really investing in Web3 projects properly in a very structured format. And at that point in time, we could see an absolute explosion. And I don't think it's only the US. India setting out a regulatory framework, bringing crypto in from the cold.
Yes.
China bringing crypto in from the cold, and then figuring out how they're going to do it, because I think there's a certain paranoia in China about capital flight, and does blockchain enable capital flight? Anywhere where there's a currency control, they tend to be quite anti-crypto because it's a get around, effectively. So how can they kind of still put their barriers up but still adopt blockchain technology at the same time? And I know that is a very active conversation within China specifically. So we've got to see these areas of the world, these jurisdictions, bring crypto in from the cold, and then allow those mass retail customer bases to enter the space instead of locking them out.
Yeah, and even countries like Kyrgyzstan, Malaysia, Thailand, they're open to, accepting crypto. So I feel like that's a positive side to this as well.
I think Thailand has the 8th largest crypto community in the world. And they have a regulatory framework. They've shoehorned a crypto regulatory framework into a TradFi framework, which sometimes is a little bit difficult to maneuver in. But at the same time, they put one foot in front of the other, and they're definitely a pioneer on the world stage within the space.
Just hoping for our industry to actually go to the moon in a good way.
Fingers crossed.
Yeah. Before we end this session, I would bother you with like 2 more questions.
Please.
Which were asked by us from our community. So yesterday we actually did like an Instagram poll, and there were a lot of questions that came in. So one of the questions is from Nazia, who is a user. She asked that what's the secret of consistent success in the crypto world?
Well, I would say it's there's always a good dose of luck, crypto or not crypto, to absolutely anything. You could have the sun on your face and the wind on your back at certain points in time, but also having a fine balance between groundbreaking technology and usable technology. There's a lot of parties within the space that tinker, and they remain within R&D within that box.
Yeah.
This is a groundbreaking technology. It is also an upgrade to existing technologies, including the internet. But at the same time, it must be usable.
Yeah.
It can't just remain in the research and development box. And I think that the parties that we see that really win, and the best example of that is centralized exchanges, it comes down to usable product where there's a low barrier to entry.
Definitely. I totally agree to this. Moving on to the second question, and this is something that even I would want to ask and I would need clarity on. It is asked by Gautam. He's also one of our users. He said, meme coins are eating up most of the market's liquidity for altcoins. Will utility coins rise from the ashes?
I think the answer to my last question and this are pretty
Yeah.
linked. I think when we get to the point where an alt token of a project and that project is delivering usable technology, and when I say usable, I mean usable in real world methods and grade
Right.
effectively, instead of it having to really attract a crypto native person user that's tinkering with the technology because they find it really, really interesting. That isn't going to see mass adoption. So trying to
Definitely.
identify where projects have a very, very solid
Use case.
blockchain-led
Yeah.
technical team, but also a product team. That's where you're going to see wins coming out of that, and that will then translate into the price of that alt token of that project.
Definitely. I think we should all do a lot of research and definitely keep in mind that team, the product, is something that makes the project.
Absolutely.
And that's what we all look forward to invest in. So, ending it here, and I would like to thank you, Toby, for being our first guest on Rug Proof with Zoina. All our community members and investors would be glad to have this up close and personal conversation with you and understand crypto in layman's term. So it's a pleasure to have you.
Thank you very much.
Thank you so much.
Thank
That's a wrap for today. I hope you got some valuable insights from the real builders of crypto. See you in the next one.